Hello, everybody, and welcome to the presentation on how to use Brewery financial statements to improve your financial results, specifically profits and cash flow. And first, I just want to thank Andrew for putting this together. I know this was a tremendous amount of work and hopefully a tremendous amount of value for everyone that is attending and checking out each of these presentations. So what I'm going to talk about today, financial statements, and specifically how to use these reports to improve your financial results. We tend to use financial statements to figure out what happened. We want to try to use them to make things happen, to take action, to improve our profits, cash flow, whatever financial metric it is that we're trying to improve. And one of the things that I talk a lot about is this concept of financial literacy, and that's the ability to read the numbers of your business. So literacy is being able to read in words, understand what the words are telling us. Financial literacy is being able to understand what those numbers are, what they're telling us. So we can see what's going on financially, the results we're getting, and take action to improve if there's areas that aren't working too well, and also take action to do more of what might be working well financially. So financial literacy, the ability to read and interpret our financial statements, really gives us the ability to project into the future and largely to be able to predict what future results can look like. So it's pretty cool. So breweries, we're focused now on creating not just better beer, but a better business. The margin for error is smaller, right? We have a lot of competition, a lot of choices, a pandemic. So a good working knowledge of the finances of the brewery can be very helpful to see a picture of what the financial report should look like. So we'll look at some examples of those. We'll get into the building blocks of the financial statements, talk about a little bit about the chart of accounts and the general ledger, and ultimately with the goal of understanding the financials so you can monitor and improve results. So this is me. My name is Kary Shumway. I'm a CPA, CFO, former CFO for a beer distributor in the Northeast, and I'm currently a partner and CFO for Wormtown Brewery in Worcester, Massachusetts. I created craftbreweryfinancialtraining.com. It's an online resource for breweries. I've got a number of financial training, educational tools there, courses. I offer a free weekly newsletter. So if you haven't already subscribed, you can go to the site and get that for free. And there's also a premium membership that gives you unlimited access to all the training courses that you'll find there. So you can go to the website, check out what those courses look like, and if there's something of interest or value, you can give it a try. I created, this presentation and this online resource really to share what I've learned. We go through working in the business for 20 years. You learn some things, you forget a lot of things. So really writing it down and sharing it, and hopefully shortening the learning curve for you so you can create a financially successful brewery. I did want to mention I have a book that's out there. So if you don't have enough books on your nightstand already, you can check this out. It's Beer Business Finance. It was written in collaboration with the National Beer Wholesalers Association. That's the association that's similar to the Brewers Association, but just for beer wholesalers. So the information is relevant for really any business. This is specific to the beer business, cash flow planning, beer finance basics, inventory management, and so forth. So if you're interested, go to Amazon, search the book title or my name, and you can check it out. So for housekeeping, if there is a chat area, if you have questions, you can pop them over there. I'll do my best to get to them as we go or hit them at the end. If there's something that comes up after the fact or you're watching a replay of this and you have a question, I definitely encourage any questions. You send me an email, Kary@beerbusinessfinance.com. If you have something that doesn't lend itself to an email or you prefer just to have a chat, open to that as well. Again, shoot me an email. We'll find a mutually convenient time to do that. Oh, and Andrew's wishing me happy birthday. Thank you. Yes, it is my birthday today. And I said, geez, what would I like most for my birthday? I want to talk about financial statements, and that's the truth. So here we are. Thank you for making that birthday wish come true. So resources and materials. I'm going to cover some spreadsheets in this course deck, and both can be available either through Andrew. I'll have to figure out how to get it to you, but certainly you can always email me and I'll send that right over to you. And of course, further reading, at craftbreweryfinancialtraining.com. I talk a lot about brewery financial statements, financial literacy, and so forth, so you can find lots of information on the website. So here is the overview of what I'm going to talk about today. First, we'll get into financial building blocks, talk about the chart of accounts, what that is, what the structure should look like. I'll share a sample chart of accounts with you, or you can download that and compare it to your chart of accounts if you're an active and operating business already. Talk about the general ledger, exactly what that is and why it's useful for you. It's one of my favorite things to read in the financials. Then we'll get into the financial reports themselves, the big three: income statement, balance sheet, statement of cash flows. Just a quick overview of what these are, why they're important, and then some examples of how you can use them to improve financial results. And we'll finish up with financial routines and a month-end process checklist that you can use. I find that good process equals good information, so it's really important to have that process, have it in writing, and use it as a document to really train your team. And also share some outsourcing options if that's of interest to you. We tend to outsource things like payroll, but maybe not bookkeeping. So there's some considerations there that might be a good idea for your brewery business. So for starters, the financial building blocks. So the chart of accounts, this is really the structure of our financial statement. So it deserves a little bit of attention in terms of what it is, how it's constructed, and how ultimately it will impact what your financial reporting will look like. So the chart of accounts is nothing more than a detailed listing of all the things you want to track and measure in your business. And the purpose of this is to provide that organization and structure for your financial reporting. So one consideration as you're making this list, or if you're going to go in and you're going to modify or audit your current chart of accounts, is really to think about the level of detail, how long you want that list to be, how detailed you want that list to be. And that's going to be dependent largely on what you want to see in your financial statements. So I tend to say the smaller the better. Keep it simple, but not too simple. Don't go bananas. I've gone bananas, in the past. I'm like, I can make an account for everything. And what ends up happening is you spend a lot of time, or your bookkeeper spends a lot of time trying to get stuff into the right accounts. And what often happens is we'll book the same expense to this account one month and then a different account the next month because we're not really. So too many accounts can create confusion and waste some time. So really be thoughtful about your chart of accounts, what the list should look like, and keep it simple where possible. So our chart of accounts, it's a listing of things we want to track, and we group it into really 4 buckets: income accounts, that's your sales; expense accounts; asset accounts; and liabilities accounts. So these are essentially our income statement and our balance sheet, all the things that live on those financial statements. So as we're making those lists, we want to think about them in the context of where are all the sales items, where are all the things we sell, what are all the expense items, where are all the things we're going to pay for, and so on. Now, the general ledger, to contrast with the chart of accounts, general ledger is a place where the chart of accounts lives. And the general ledger is going to track all of our business transactions. So you can think of the chart of accounts as a big list of things we want to track. You can think of the general ledger as like a big accounting book with you write down all the different transactions in your business. Now, clearly, we're hopefully not using an actual book, but that's sort of the mental image you can have when you think about the general ledger. It lives in your software for sure. But that's the contrast between these two terms: chart of accounts, general ledger. So I'll walk you quickly through some examples of how you can construct your chart of accounts and what that can look like. So we'll look at this, take a couple examples from the income statement. We have our sales category, cost of goods sold, gross margin, and operating expenses. These are kind of the big 4 that live on our income statement. And what we want to do for each one of these is make a list of the different accounts that should live under these categories. So for sales, let's take an example of a tap room. We may have sales of draft beer, packaged beer, and merchandise beer. So we really just want to create a separate account for each of the different sales that we want to track. Now I'll show you in a bit if we're going to market through the tap room, but also through a wholesaler, we'll also want to create separate accounts for those different lines of business. But to continue with this example, let's say it's a tap room. We've got sales of draft, package, and merchandise. Next, we go down to our cost of goods sold section. And the general rule or best practice this is not mandatory, but it's something that I like to do, is for every sales account, I want to have a corresponding cost of goods sold account. And the reason for this is this allows us to quickly compute the margins for each of the different sales types. So for example, sales of draft beer, I've got cost of goods sold related to draft beer. I've captured those in separate accounts. Now I can quickly see what the margin is on draft beer. Likewise, the margin on packaged beer, and likewise the margin on merchandise. Sometimes it's quite different than you might think. So our accounting systems, our brewery software systems, may have a much more detailed way to show that margin analysis, but I like to have just a kind of a quick high-level look within the income statement. And for every sales account, having a corresponding cost of goods sold account can help do that. So you're going to follow that type of process through all of your things that you want to list. So all of your sales items, cost of goods sold, expenses, assets, and so forth. And the next step is to take that list and we're going to add a number in front of it. It's really the last step, is we're going to add those numbers. And these are general ledger account numbers. And these are going to provide for unique accounts and a numbering structure so we can keep things organized. What happens with letters and words is we can write the same account description multiple ways, and the system isn't going to flag it as a duplicate. Miscellaneous expense, miscellaneous other expense. You can go on forever. But if you have unique accounts, you can only have one of that particular account. You still need discipline in your descriptions, but this is really just adding that structure. And this is also where people tend to glaze over. Whoa, look at all these numbers. So that's why I say focus on the description first, focus on what makes sense for you, and at the end we can come in and add these numbers. So just as an example, continuing our tap room for sales, we've got sales, draft, package, and merch. We might use a numbering system such as this. 4,000 can indicate sales, and then underneath that we might have 4,010, 4,020, 4,030. There's no magic to this. It's really just to have an organized numerical approach to keep everything straight. And one best practice here is, you'll see that I'm doing 4,010, 4,020. This gives us some space if we want to go back after and add additional sales accounts here. So we might add 4,015 as sales events through the tap room, something of that nature. As I mentioned earlier, we can also use the chart of accounts to account for separate business units. And I think this is really important to stress. This is, if you're selling your beer through multiple channels, i.e. through the tap room and or self-distribution and or wholesale, if you have more than one of these, it's important to really separate those transactions in your chart of accounts. And we can do this using essentially what's called a company code or a business unit code. So you see here I have the number 4000-01, sales for taproom. So the 01 is indicating taproom activity. Now that's that business unit code. Next one down is 02, self-distribution. So anything in the chart of accounts, income, expense, in particular, you tend to not do this on the balance sheet, but you could, assets and liabilities, you can have it separated by business unit. And what this does is it quickly allows you to run a financial report on the activities of that business unit. And a lot of times the tap room is very profitable, while the self-distribution might be break even or you might be losing money. But you can't see it unless you have a good structure and a good way to run it. So I definitely recommend considering the use of these business units, and it can be in this fashion or another, but this works pretty well. So when you're done, you go through the chart of accounts just as a snippet. Will look something like this: GL number, general ledger number, and a description for everything you've got. So in this presentation deck, sample brewery chart of accounts, you can click that. That'll take you to the full download of the chart of accounts, and you can compare that. Alternatively, you can go to craftbreweryfinancialtraining.com, search for brewery chart of accounts, and you can grab this information. So, an action item here is really, what does your chart of account structure look like? Why is it set up the way that it is? Does it make sense? Is it working? And one way to figure this out is, are you getting the information in your financial statements that you want to get? And if you are, you're good, no worries. If you're not, you feel like maybe you could do better, the chart of accounts is really the place to start. So you can download that sample chart of accounts, compare it to your current list, add and subtract as necessary. If you're not using different accounts or account codes for your different business units, I definitely recommend you take a look at doing that. And lastly, just don't get overwhelmed by the numbers. Start with the descriptions, what you need to track. The numbers are just there to really add structure, and accountants love numbers, so that's why they're really there. All right, let's talk about the brewery financial reports, the big three: income statement, balance sheet, and statement of cash flow. So you've likely heard of each of these. You likely look at only the income statement if you're like most folks, because that's where the fun is. Did we make any money? What were sales? That's the most exciting of the income statements for the most part. So the income statement is going to track our sales, cost of sales, margins, operating expenses, and profit or loss. That's what lives there. A balance sheet is going to give us our assets, things we own, liabilities, things we owe, and whether we have an equity or a deficit. So if our assets are bigger than our liabilities, we have an equity position. If the opposite is true, we're in a deficit. So that's what the balance sheet can show us is, do we have retained earnings? That's the same as saying equity. Do we have equity? What's the relative health of our business? Generally speaking, a higher equity position means you're a healthier company. There's a lot of other factors, but that's something the balance sheet can tell you. Statement of cash flows, as the name implies, measures the flow of cash that's coming into and out of the business. And it's different from the income statement in that the income statement measures transactions. The statement of cash flow measures cash. And there's often a very big difference in timing between the two. The income statement measures a sales transaction. We record it when that sale is earned. The income statement doesn't care if that sale was collected. Doesn't care if it was ever or when it comes in. That's the job of the statement of cash flows. Likewise, the income statement is recording an expense when it's incurred. Doesn't care when we paid it. So the statement of cash flows, that's its job. So we need all three statements to show us different things. So how do you get started with using these financial statements to improve your profits and cash flow? One way is to keep it simple. I definitely stress there's a lot of good information the financials can show us, but in my experience, a lot of times people shy away because it looks too complicated. So let's make it simple. It doesn't have to be any more complicated than this right here, a 5-line income statement. So really what we're doing is we're taking our income statement and we're just taking the subtotals, the major categories of sales, cost of goods, margin, operating expenses, and net income. And we're going to just display it on this quick little one-pager. I'm going to have, this is for a year-to-date period. You could do this for the month. You could do it for whatever period you like. And I like to add in these percentages because I can quickly see what the percentages are, what key metrics are, and compare those to expectations. So for example, the two that I look at on a regular basis are margin. I want to know what our margin percentage is, and I want to compare that to my expectation. If my expectation is that we should be at a gross margin of 45%, this report is showing me 42.5. I know we're coming up short. So I got to take the next step. I have to run some further analysis, but immediately I know I might have an issue there. I got to look at this. Could be a reasonable explanation, but it flags me. Net income is the other one as a percentage of sales. If my expectation is 20% net income to the bottom line, and I'm at 15, again, it's an indicator that I need to check out what's going on. Something might be, operating expenses might be running high, and there might be any number of explanations, but very quickly I can use this to determine if there's areas that I need to spend some time with and address and potential problems to fix. You can take that concept a little bit further and use what I'll call a real-time income statement. One of the challenges with financial statements is they're historical, they're looking backwards, right? We don't get, we're sitting here in early October, we're not going to get September financial statements, most likely until around the 10th of the month or the middle of October. So, it's too late. September's over. And it's also maybe too late to fix if there's something going wrong in September that's now also gone wrong here in October. So to create a real-time scorecard is definitely something to look at. So we'll take that simple income statement, sales through net income, and then we're going to add some numbers here. First, I want to know on the left-hand side, what were our actual results for the same month last year? So I've got actual October LY, that means last year. And what were they as a percentage of sales? So that gives me kind of a stake in the ground, a frame of reference. What did we do last year? Next, on the right, October TY goal, October this year goal, is essentially the financial forecast or the budget for the month that we've created. So I want to know, what am I shooting for? What's my goal? And then in the middle, and this is where the magic happens, is we want to look at the trend. How are we trending so far for the month of October? Today's October 6th, pretty early into the month, but I've got some sales data, I've got some margin data, I've got some expense data, and then I can input what I know, the actual stuff, and then I can estimate the balance of the month. And I can estimate the balance of the month any number of ways. One would simply be take a proportionate share of the remaining budget goal for the rest of the month and add my actual results to the budget goal. And then I have a new trend. It's not perfect, but it'll give us a pretty good look is, are we heading towards hitting our goal or missing it? So in this example, we can see that we're coming up a little short on sales, a little short on net income. We know right now, October 6th, that we've got some work to do. We don't have to wait until the middle or early part of November to realize, oh, we missed our October goal. So sales is pretty easy. We tend to watch that on a regular, but we kind of know where we are with sales. That's just in my experience. Margins, OpEx, net income, usually don't really know. So this is a way to kind of pull it together, keep it simple, get some real-time financials so that you can use this information to identify any problem areas and improve those results. So the income statement gets more complicated, of course. There's lots of lines. We've got all the different accounts that we talked about under sales and cost of sales, and there's lots of operating expenses. I would say keep it simple. Do the 5-line statement, see if that works for you. Once you're comfortable with that, then you can expand and look at the full set in this example of your income statement. And looking at it again as a percentage of sales, I find useful. It's just easy for comparison to the budget, easy for comparison to historically what did we do. So next I want to share with you ways that you can use financial information in sort of a non-financial way, if you will. So we're going to take financial information and use it outside of the traditional income statement, balance sheet, cash flow approach, and just use scorecards that are maybe a little more approachable. We're going to take that data, summarize it, and present it in a fashion so we can watch the most important numbers and share this information easily with our team to work together to hit the goals. So to improve financial results, we usually need some help. We got to share these numbers. So two quick examples: a sales scorecard and a key metric scorecard that I'll show you. This is my favorite by far, Taproom. If you got a Taproom, just a quick dashboard on the left-hand side of the things I want to measure: total sales in dollars, sales growth, average rate per customer, what are people spending when they come in or do curbside pickup these days, how many customer visits, what is our revenue per barrel looking like. And I'm going to roll in kind of elements of a financial statement presentation here where I'm going to have actual, in this case I've got actual June of last year. So I want to know what the actual last year same month looked like. You can pretend that's October. And I want to know what my actual goal is for this month. And then I want to know what my trend is. So same kind of approach. What did we do last year for sales, sales growth, average revenue per customer, and so forth? What's our goal? How do we want to improve? And then where are we trending? So again, really quick, these may not be sales-focused Taproom scorecard numbers that you want to track, but that kind of concept. And a lot of this stuff can come very quickly from a point of sale system. We use Toast. I can get most of this stuff at the press of a button, not all of it, and then I'll have to put it into a tracker so I can compare it to our goal. Another way to use the financial information is to use more of a key metrics approach. So we talked about sales, and the key metrics under sales, these are more, say, operational or expense-wise. So we could do revenue per barrel, we can do our gross margin. Payroll as a percentage of sales tends to be a big one because payroll can be a really big expense. So measuring payroll as a percentage of sales, tracking that historically, and then layering in industry averages if you can find them, can be an interesting way to improve results if you track it. So here's what that can look like. You identify what your key metrics might be. Payroll as a percentage of sales, as we just talked about. Take that approach of what did we do last year, same month? What was our payroll as a percentage of sales? 18.5%. What is our goal? 18. We want to get a little better. Where are we trending? So we can see that information, again, real time. If we get industry averages, we can layer that in as well. And that may be a useful comparison. But this is just a quick way. Take your key metrics, quantify them, have a goal, share the information in real time so you can work to improve. And just a note about industry averages, I do get that question a lot. How do I find industry averages for this or that or the other thing? My general feeling is that they can be interesting distractions for a lot of reasons. One is it's really hard to find a comparable industry average for your exact circumstance. You're in a different market, you're in a different size. So that's kind of like caveat on those. But if you can find them, certainly use them. My preference is to benchmark against yourself, really measure your past performance and set a goal to improve. All right, so that was the lightning round on those numbers. And again, those spreadsheets, you can get those on the website. Search for them. If you can't find them, email me. I'll send them to you, or Andrew can get them to you. I want to finish up with talking about financial process, right? We talk about garbage in is garbage out. That's not what we want. We want a good process so we get good numbers out. And the basics that you think about here, we got to hire the right people. They got to have the right skill sets and experience. That's kind of a given. But when we train them and we bring them in, we want to have a good process that's specific to our brewery, our operations, our financials. So having a process, having routines, having systems where we can audit and cross-check and make sure the process is actually happening. So we watch that. We have accountability. That's really important. And we can bring in outside CPAs and bankers. Certainly, if you have those, they can be a great help in this regard. But first, we need to get on paper what our process is. So what this can look like, and this is just kind of a cut and paste of a Monthend checklist, is just simply make a list of the things that need to be done so that the financial statements are going to be complete and accurate. So we want to start with a to-do list, what needs to be done. Want to list out the due date, when do you need to have it done, who's responsible, so there's no confusion about who was supposed to reconcile the bank statement, and check it off when it's completed. So it's just a checklist. It's good enough for airline pilots. It's good enough for us financial and admin people. So in this example, we've just got the different categories of things that need to be done. We're accountants, we're financial people. To get the financials done, we need to record journal entries. We need to have cutoffs for our accounts payable. And all that means is we need to stop posting any new invoices at a certain date so we can get the financials actually done and completed. We need to reconcile the bank statements and so on. So it's a fairly straightforward process. Make the list, have due dates, indicate who's responsible, and then check when it's done. But it'll make a big difference in terms of training and then making sure the right things are done on a regular basis. So again, this is something that's available on the site. Just go over and search Monthend Checklist, and you can try this out. And certainly it's not one size fits all. There's going to be things on the list that are not relevant and other things you may want to add in. Just some thoughts on outsourcing. We tend to outsource things like payroll. It just kind of makes sense. We tend to not outsource things like bookkeeping. We tend to keep that in-house, but we can. I mean, that's something to think about if you can be more efficient and effective with an outsourced option. So you want to look at, operationally, how does that work? What are the financial costs relative to that, the pros and cons? And you might find that you've got some savings if you're going to look at outsourcing. One thing I definitely recommend you do not outsource is your cash flow management. So cash is king, cash keeps us in business. That's something that ownership, management have to keep their eyeballs on. They can't outsource that to someone else. But within the finance and accounting and bookkeeping duties, there may be opportunities to do some outsourcing. So again, on the site, I've got some options, some resources you can check out if you want to search that bookkeeping outsource options. So to wrap it up and give you some action items, we talked about the financial building blocks, the chart of accounts, what that structure can look like. A recommendation there is download the sample chart of accounts, compare it to the one that you've got now, and see if you want to make any changes. And again, changes would be driven if you're not getting information that you want to get on your current financial reports. So if you're not happy with your financial reports, look to the chart of accounts, maybe to make some adjustments. The general ledger, think about the big book of transactions that's got all the detailed financial transactions. One of the things that I do on a regular basis, I look at the expense financial transactions. I want to see what is being recorded, what's hitting the books. The general ledger can be a great way to do that. Talked about the brewery financial reports, the big three: income statement, balance sheet, statement of cash flows. So the action item here, or something to consider, is if you're not currently running each of those reports on a monthly basis, see if you can run them and take a look at them. Again, the income statement we're pretty familiar with: sales, profits. Balance sheet is going to tell us assets, liabilities, what we own, what we owe. It's also going to show us equity or deficit position, which is an indicator of the relative health of your business. Financial routines, month-end process. We've got to have good process to have good information, to have good numbers. So consider that checklist as a list of best practices and reconciliations that you can use in order to make sure you get good numbers. And then you can use that document to build and train your team, find those people, give them a good process once they come in, and just make sure they're following it. So that will wrap up my presentation. If there's any questions, comments, feedback, I would love to hear from you. Feel free to email me, Kary@beerbusinessfinance.com. If you haven't subscribed already, you can go to craftbreweryfinancialtraining.com, and you can sign up either for the free newsletter or check out the premium subscription. There's a number of courses. I think there's 10 courses on there now, everything from how to grow taproom sales to how to build your brewery financial plan. It's that time of year. It's October. It's time to build that financial plan. So I've got a course specifically on that with all the spreadsheets and videos, and it walks you through. So that's all available with the premium subscription. So thank you for your time and attention. I hope there was some useful takeaways here, and I'm seeing no comments or questions. So if you want to, hit me afterwards via email. Happy to answer any questions that you might have. And for now, get out there and improve financial results in your brewery. Thank you very much.